Yeah, so I first make sure that there's a break-even range. Why do I make sure of this? Is when price pushes beyond my break-even range, yeah, and pushes up to 1 to 2, I always bring, okay, when price pushes to my break-even range and I know that price has pushed for more than 55 pips, because our stop loss here was 53 pips, I bring my stop loss to break-even. Yeah, when I bring my stop loss to break-even and price has pushed to my 1 to 1, that's when I take partials. I take 35% of my profits at 1 to 1. Yeah, so when I take 35% of my profits at 1 to 1, I'm remaining with 65%. So point number one is why these exits are more important. Is point number one, we have taken our partials, right? 35%. Let's say it's $100, like the overall target was $100, right? So I've already taken $35 from here. Yeah, that's already in the bank. Then we have put our stop loss to break even. That means we have no risk on this trading. So first of all, we have taken our profits. Then the trade has no risk to it. We're not losing anything even if price comes up to our entry area. That's the second most important point. Then the third point is, here now your emotions are off, right? Because you're already satisfied that you've taken something, because something is better than nothing at all. Then you're risk free. Yeah, so the mental aspects, the mental warfare, the mental whatever is all gone. It's all gone. Here you relax. So what you do is you just leave the rest to go to your 1 to 3 risk to 1 ratio or 1 to 2 risk to 1 ratio. Because okay, the reason as to why you can hold, the reason as to why I can hold for this long is because of the first two reasons: risk free, and I've already taken some partials. So here I do not even panic. I just leave the chart and come back the next day. Yeah, and I think you can see the point, right? I think you guys can see the point I'm talking about. The reason as why most traders can't hold their trades for more than a day is because of the things I've just explained. Yeah, it's because of the things I've just explained here. Yeah, you can replay that part back and hear the things I've just explained in this video here. So this is the first example, and you can see price has hit a profit, and you may be like, top tier, you're choosing winning trades. Yes, I may be choosing winning trades here, but have you understood the point? Have you understood the point? That's the most important thing. Okay, now we go on to the next trade. So prices, we identify that price is making higher highs and higher lows, higher high and higher low, right? So here we draw our key level on the previous higher low, right? Higher high, higher low, higher high, higher low. The previous higher high is the second most important key level, right? As I always say in my previous videos, and I give all those reasons in the previous video, so you can just go and look for it somewhere there, or I'll put the link below in the comment section below. So price pushes. After every push phase is an exhaustion, right? And I told you guys in the previous video, what I explained, that if the push phase takes a week, just make sure that the exhaustion also takes 5 days at least. So the exhaustion comes, price attempts to break below, it fails, breaks back in, gives us a double bottom here, and look what happens. You just wait for the break of that trend line. Perfect. So first is first. Yeah, you ask yourself, do you have a break-even range? Here your stop loss also 53 pips, right? Do you have a break-even range where you can take 1 to 1? You check your previous data. As you can see, 53, 1 to 1. Yes, previous data tells us we have a level where we can take 1 to 1. Yeah, so when you have that level where you can take 1 to 1, when price comes there, take 35%. When you take 35%, you're satisfied now, right? You're not worried about profits because you have made some, right? This is like this, we do this in order to trick our brains, right? Because this is a mental warfare, right? Real traders know what I'm talking about. Yeah, and you have to make sure you're sticking, you're watching everything, because if you miss any of the things I'm about to talk about again, yeah, and you can see I've been dropping gems. If you miss anything, that's the reason as to why your trading may not take off. Yeah, so we're already taking profits. Then second thing, we are risk free here, right? So we eliminate all the emotions. Yeah, and you can see we are risk free. So we go for our 1 to 3. 1 to 3, that's 150. 150 there. As you can see, price pushed. So after you're risk free and you've taken also 1 to 1, so when price switches up to 1 to 2, that's when you want to take more profits. 1 to 2, you take another 35%. You take another 35%, that means you're up what? 70%. You already banked 70%. And if you already banked 70%, there you must now be relaxed, because this is the market. The market doesn't owe you anything. It doesn't owe you anything. You must just be relaxed and happy. That's why you shouldn't move this stop loss into profits, because you miss out on the moves that are going. I'm teaching you guys next level trading. This is next level trading. So you already taken your 1 to 2. Here your emotions are out of the way. Then you just go for your 1 to 3. You finish the 1 to 3. You see? Simple as this, guys. Simple as this. Let me show you the next trade. Yeah. Make sure you're still tuning in. So higher high, higher low, higher high, higher low, right? Higher high, down bottom, higher high. Then look at this. That's it. Higher high, higher low, higher high, higher low, higher high, higher low.